Think we're done yet?
Yes, we are.
Volkswagen recently revealed details of its ambition to become the world's largest electric vehicle seller by the mid of this century. Though Volkswagen is catching up to Tesla in the global electric vehicle segment, analysts say the German automaker still lags behind Elon Musk's company in some crucial areas, such as software, despite having an advantage of magnitude. Join me as I explain how Volkswagen plans to bring Tesla down. Number 3. The unified cell. Volkswagen is working with partners to improve the battery system's performance and cost all the way down to the cell level. It plans to launch a new battery cell called the Unified Cell in 2023 to be used in up to 80% of the Volkswagen Group's EVs by 2030. Over time, as economics of scale and other measures, including recycling efforts, take hold, VW expects to lower its battery costs by up to 50% in entry-level segments and up to 30% in high-volume mid-market segments to significantly below $119 per kilowatt-hour. That's low enough to make Volkswagen's EVs profitable and lower than many potential competitors are likely to achieve in the near term. Later in the decade, Volkswagen expects to introduce solid-state battery cells. These are currently being developed by QuantumScape, a company in which VW has a significant investment. That battery is expected to cut recharging times and costs further while giving additional range. Number 2, investing in the charging point networks. Not stopping at building just the EVs, Volkswagen has also started investing in a large-scale expansion of the fast-charging networks in Europe, North America, and China. In Europe, together with its partners, it expects to operate about 18,000 fast-charging points by 2025, up from about 3,600 today. As per Volkswagen Group's analysis, this will be enough to accommodate about one-third of the total expected demand from Europe in 2025. About 8,000 of those new points will consist of 150 kilowatt fast chargers installed at service stations owned by BP plc, the British multinational oil and gas company. The remainder would be built by Spanish electric utility Iberdrola, Italian electricity and gas provider Enel Group, and by Ionity, which is a joint venture of charging network established by Volkswagen and several other automakers in 2017. In North America, Volkswagen's Electrify America, the charging network created as part of Volkswagen's $15.3 billion Dieselgate settlement, would have about 3,500 fast charging points up and running by the end of 2021. Meanwhile, in China, Volkswagen plans a total of 17,000 fast-charging points by 2025 through an existing joint venture. Number 1. The numbers. Volkswagen expects all-electric vehicles to represent more than 70% of its total car sales in Europe and over 50% in China and the US by 2030. 2030 is an important year for green cars, as that is the date when the European Commission, which is the executive branch of the European Union, wants to have at least 30 million zero-emission vehicles on European roads as part of its overall campaign to achieve carbon neutrality in the EU. The ambitious EV offensive has firmly put the 83-year-old company on track to overtake the current market leader, Tesla, over the next 2 years. The group's pure electric car sales more than tripled last year to over 230,000, closing the gap with Tesla, which delivered just shy of 500,000 vehicles. However, as of today, Volkswagen remains behind Tesla in terms of its software and battery capabilities. It is reported that Volkswagen currently has a $1,300 per car cost disadvantage in batteries versus Tesla, and this gap is unlikely to be closed soon due to Tesla's vertical integration and innovative power. If UBS analysts are to be believed, software would be the battleground for EV supremacy in the future. Accordingly, Volkswagen plans to invest $19 billion over the next 5 years to upgrade its digitalization and software capabilities. The company plans to bolster its software operations to 10,000 staff as it develops automated driving features and in-car operating systems. The hiring push would make Volkswagen one of Europe's largest software firms behind SAP SE. Europe's largest automaker is overhauling its sprawling operations to free up funds for new technology as it plans to build the industry's largest fleet of electric vehicles. The company is introducing several new battery-powered models, has unveiled Europe's boldest battery production push, and struck a deal with the unions to cut more jobs in Germany. They intend to use a platform approach to leverage economies of scale and raise the efficiency of deploying technologies including software, batteries, and charging infrastructure. These plans to widen cost-saving efforts and standardize digital technologies are key to the German manufacturer's ambitions to rival Tesla Inc. on electric cars and also counter the existential risks posed by the automotive ambitions of the newbies, Apple Inc. and Alphabet Inc. So, what do you think? How do you perceive VW taking on Tesla? Who do you think would ultimately emerge as the winner? Let me know in the comments below. Be sure to subscribe and like us. We will see you next time on the channel. Until then, it's goodbye.